Hey y'all, this is Miss Allie, and this is Accounting 1. Today, right now, we're going to be doing 6-4 in the book, 6-4, which is posting those adjusted entries that we did when we had to make the worksheet. Okay, so if you remember that we back in the day, chapter 3, we used general journal, and again, general journals used for anything whatsoever. And in this case, they said that on April 30th of the current year, Fix It Now has completed the worksheet, journalize the adjusting entries, use page 8 of the journal. So it already has page 8 up here for us. Okay, and we can see our worksheet here, and we can see what we've done. Well, we have to show the difference. We can't just let this ride that we changed supplies and prepaid insurance. We actually have to show it in the general journal so that we can post it to the ledgers. All right. So in the book, I'm on page 176. 176 as the guide, if you would like that. And if you're doing this for real, you would actually center first on the account title page line. You would center it and say adjusting entries. And then underneath this is where you would put April 30. And then you have to put, remember, you have to put um, the debit um, account first. So the first one that we had was supplies. And we have supplies expense was the debit. We don't have to put any document number here. And the dollar amount was $153. Now remember, we had to reduce the supplies. And supplies are assets. And when you reduce assets, they are a credit. Expenses increase on the debit side. So this makes sense. All right. But I'm doing the very same thing that I did, or what we did up here in the worksheet. If you look up in the worksheet, right here, supplies expense is the debit, and the credit is the supplies, because this is how much they used up for this time period. All right, that's how much they used up for the time period. Next, we do the 30th again, and this time we have insurance expense. And remember, expenses increase on the debit side. And we go up here and we find out that our debit insurance expense, 125. 125. And then the account that was being debited in this case is an asset, but we're reducing it. And it's prepaid insurance. We're reducing it. And that's what we found out with the adjustments. If you remember, the reason we had to do the adjustments was because at the beginning of the period, the supplies were 228 and prepaid insurance was 375. But at the end of the period, when this document is being made, the supplies had gone down to $75 value and the insurance had gone down to a value of 250. The reason being, this is how much was used up. $153 worth of supplies were used up, and $125 worth of insurance was used up. All right. So we had to put that in our general journal like this. Now we're going to grade step 1. and it liked it. 2 of 2. Good. So now we're going to the next step. That was just to put it in the general journal. Now we have to post these to the general ledger. So the first thing I'm going to do is I'm going to go to Supplies Expense. I'm going to open up Supplies Expense way down here at the bottom. And the date is April 30. And the post reference is G8. I'll show you again. General Journal, page 8. And this is a debit for $153. A debit for $153. We don't have a balance to begin with, so this becomes our new balance, 153. And we take this account number, 550, that's for supplies expense, 550, and we take it up here and post it there. That tells anybody coming behind us, our boss or our auditors or whoever, it tells us that we have posted that part of the transaction. Now we have to go to supplies. I'm going to close this up and go to supplies. And this is the 30th again. And again, I'm taking this from my general journal, page 8. And it's a credit, supplies, it's a credit for 153. So I'm going to put that in credit for 153. Now, I already have a balance of 228 in there. Debits and credits cannot mix. You can't not add them. They're like oil and vinegar. They separate. All right? So you have to subtract these two. Thing is, the higher dollar amount is still in the debit. So I have to leave that there and then subtract 228 minus 153. And it is $75. And that's what we had shown on the worksheet, that was the final balance. Have to take this account number 140 and we have to plug that in to show that we did indeed post that to the general ledger for supplies. Now we're going to go to insurance expense. We put in April 30th. This is G8, still our general journal, page 8. Expenses increase in the debit, and the dollar amount here is $125. $125. There's no balance before this, so now the new balance is 125 debit. It's got to be in the debit column. The account number, 530, I have to move up here to 530. Shows anybody that I have posted that part of this transaction. Now I have to go to prepaid insurance. Prepaid insurance. I put the 30th, put my G8, show where I got this from. And this is now a credit of 125. 125 credit. Just like before with supplies. Debit and credit are like oil and vinegar or oil and water. They do not mix. Oil and water, they do not mix. So you have to subtract these two. So 375 minus the 125 gives us a ending balance now of 250. 250 is what the documentation had told us that at the end of the period, what the insurance was worth, 250. So that makes sense. This account number, 150, I have to take it up to my general ledger, plug it in to show that I posted that, and now I am done. Okay. Now I'm going to go down here to final step and grade final step. It comes back and tells me What's it say down here? 2 of 2 points. So I got 5 of 5, 2 of 2. Good deal. All right, save and continue. So now it goes to the on your own, which works exactly the same way as what I just did with the work together. So I'm going to bug out of here. I'm going to let you keep on going. If you have any questions, leave them in the comments. If you need have any questions for class, you can email them to me, and I will see y'all later. Stay well.